Hey guys, and welcome to the Working Money Channel. All right, we got the modern investor here saying this, okay? He says, all right, everyone, almost to the month of truth. Every analyst said July kicks off the largest bull run we've ever seen. Let's see if they were right. The interesting thing that I noticed is that, Julys generally tend to be bullish during bullish years. So if we go back and let's take a look at Bitcoin real quickly here. This is the Bitcoin chart on the daily. And, as of July, when we did see the final push to the upside for Bitcoin, and this was a bit of a weird year because we did have that double top pattern. But guys, July, right in around here, it was mid to late July 2021. This is when we saw the start of that final peak. That's what got Bitcoin up to its final all-time high. Conversely, if we take a look at 2017, we did finally get a push to the upside in July, starting in and around here. That was the final push, and that was mid-July 2017, before we saw that euphoric phase topping out in and around December of 2017. And those were two bull years. So an interesting observation. I also wanted to just take a look at this metric here. How high did Bitcoin go after it did hit an all-time high? Before we did see the July kickoff, it was about 60% above its all-time high. What about over here? Can we glean anything from this? I don't know. Let's just take a look. This was about 50% off its all-time high. Huh. Interesting. And what do we see here? Bitcoin is, please don't tell me it's somewhere between there, 40, 50, 60%. Interesting to say the least. Maybe he's onto something there. I mean, altcoin season is also apparently supposed to start in July of 2025, coming from Chiefly here. The golden accumulation phase ends next week, and low caps will pump 100 to 150x. Every $50 in altcoins today equals 20,000 by the end of the summer. So another prediction here that July is going to kick off the alt season. Alt season is nowhere near in exuberance at the moment. We still have fear and greed at 52. Market cap is lower. CMC 100 is lower, but not by a lot. We're in the red today, but guys, just by less than single digits. It's 0.22% to the downside. And, some coins are actually up, some are down. Again, we're still just seeing the status quo. Market moving sideways, not really doing too much. Ali charts here commenting on Bitcoin facing a key rejection while the Stoic RSI flashes a death cross on the daily chart. A move back to $100,000 is possible unless we get a sustained close above $109,000. So let's go back to Bitcoin. Let's take a look at Bitcoin price at the moment. And let's go to here. Let's bring it on the 4-hour chart here. I'm going to throw a trend line down here. We still have to get up above that trend line. So currently Bitcoin is hovering in and around 107.9, so almost 108 at the time of this recording. But it has to go up above this trend line. I think 109 is doable. That would get us, that would definitely boost market confidence. So we will just have to see, again, for more information on what I'm going to be doing for this particular bull run, where my eventual targets are going to be. You can follow me at patreon.com/workingmoneychannel. I think we had a pretty successful live Q&A event yesterday. As the bull run heats up too, guys, I'm going to be posting more over there at patreon.com/workingmoneychannel. Everybody's going to want to know in the moment what I'm going to be doing. So it's going to get really crazy, really fast. Anyway, check it out if you're interested. John Deaton here posting this regarding Linqto. Okay, so we've got some Linqto news. It depends on the investment. He's responding to the Patriot Investigators tweet here. I'd like my money back. Apparently, there has been some not so great news from the people at Linqto. He writes, if people got their money back from PolySign, it would be a great deal because PolySign is worthless. But what about Ripple and Circle? I invested $30,000 in Circle on the Linqto platform. My investment today is worth $157,000. If Linqto gave me back $30,000, it would net over $120,000 from my investment. I didn't invest in Linqto to make a killing off my money. When Ripple did a buyback in June of 2024, Ripple offered $175 per share. My average cost was $33. Some folks got in lower and some higher. Linqto bought the Ripple and Circle shares, so if they just returned people's money, they would receive a financial windfall. No way are the people who screwed us over there going to benefit from screwing us over. I'm not letting that happen without a fight to the death. So John Deaton apparently it sounds like he's going to take on Linqto. No doubt some folks feel frustrated and angry. I do. There are people out there who take advantage of people's fears, anger, frustration, and impatience. They might say, I'll buy your interest for hoping to take advantage of people. My fear is that some folks might try to cash in on people's fear and anger. So guys, that is the latest news from Linqto. Again, I will keep everybody posted if I do hear more. Wanted to thank John Deaton, though. Wanted to thank Ali Charts chiefly and the Modern Investor for posting those. Michael Branch, guys, bringing this to our attention with regards to Ripple's stablecoin, the RLUSD. Now, we're talking about real-world adoption, and it feels like we are getting more and more information, more and more development news as the days, weeks, months go on. So let's start with Ripple's stablecoin, the RLUSD. It is quickly becoming a standout player in the digital dollar space, with its circulating supply jumping nearly 50% in June alone. So those numbers in and of themselves, very, very impressive. Data from DeFi Llama shows the asset now surpassing $455 million in issuance, reflecting a surge of more than $150 million this month. So you compare that to what's going on with some of these other stable coins. Yesterday, I did talk a little bit about Anchorage, the company Anchorage, how they are connected to government and how they see the RLUSD as very compliant. One of the most compliant stable coins. I'll link that video up here if you didn't catch it. On top of that, we also have John D'Agostino, the head strategy for Coinbase Institutional and co-founder of the AIMA Digital Asset Working Group. And here's what they said. We have found an announcement partnership between Alchemy and Ripple that could allow people to easily access Ripple's US-backed stablecoin using payment methods. So that was the most recent update here. Partnership between Alchemy and Ripple. There you guys have it in black and white, using payment methods that I know about, like credit cards, Apple Pay, JP Morgan filing for trademarks for what I guess people are speculating to be its stablecoin. But Ripple's US-backed stablecoin going to be used as a payment method. And for you guys interested in the details, I do have the transcript here. And this was just from 4 days ago, June 26, 2025. So if you guys want to read that, it is going to be listed in, I always put the links in the description of the video. They talk here about the Genius Act, and the clarity provided by the Genius Act is just going to give, many stablecoins a leg up. American legislators are frantically trying to pass bills to make sure U.S. dollar dominance, well, as a byproduct, make sure U.S. dollar dominance stays intact. And, it seemed like out of nowhere, Ripple released this stablecoin, but I have a feeling they knew the writing was on the wall and they knew what to expect next. So on top of that, I want to show you guys this older clip of Chris Larson talking about how Ripple and SBI Holdings, they were talking about creating a cryptographic cryptocurrency back in 2005, 2006, allegedly, before Bitcoin even existed. This courtesy of Digital Asset Buy. Listen to this.
So, weirdly, we talked about this, I remember, with one of our big Japanese investors, Kitao-san, who runs SBI in Japan, which is a phenomenal kind of fintech conglomerate. And boy, was this back in 2005, 2006? We were talking, he was, Japanese people have always been great currency traders and are always fascinated by this intersection between currencies and coupons, and fascinating, really, really absolutely amazing economy and society. Just love it there. But we had a discussion way back then, and I think we both kind of recognized this is going to happen. And again, that's not a novel thought. If you go back to 2000, during the dot-com boom, the first one, there was these models called beans and floors. They were sort of coupons with sort of an element of currency. And then even before that, you had some very localized currencies like Vermont dollars. I think Germany had a whole bunch of small ones for various communities. So this concept of a non-governmental currency has been around for a long time. And even government currencies really haven't been around that long. People don't realize, kind of even the U.S. system, or is it like 120 years old or something? So, we look at Bitcoin, it's 15 years? It's a pretty big chunk of kind of how long fiat's been around. So we should just keep in mind, humans are just starting off on this journey. So the idea that this is somehow violating some key rule of, governments have control of this, I don't buy it at all.
So talking about cryptocurrency as if it's just kind of a normal thing. Alternative currencies have just been around, and discussing this concept really before the popularization of Bitcoin. It is interesting that they were talking about this. I mean, he doesn't say it's cryptocurrency, but guys, it is Chris Larson, and he was one of the co-founders of OpenCoin. So then later became Ripple, of course. Interesting clip there. Wanted to thank Digital Asset Buy for that. Rick Edelman now recommends crypto allocations up to 40%. Guys, that was a shift from 1% guidance, I guess, I don't know how many years back. Today I am saying, this is the quote, today I'm saying 40%. That's astonishing. Edelman told CNBC's Crypto World this week. No one has ever said such a thing. That's a fairly bullish allocation, I guess, in the institutional world. I mean, that is potatoes when it comes to the crypto OGs like you and I. In his 2021 book, The Truth About Crypto, Edelman suggests allocations as low as 1% were appropriate, reflecting the uncertainties that clouded the market just a few years ago. But now he's changed his tune. Edelman, who leads the Digital Assets Council of Financial Professionals, said the dramatic change stems from what he described as the industry's transformation. 4 years ago, we didn't know if governments would ban Bitcoin, if the technology would fail, or if institutions were going to adopt it. But guys, fast forward to today, and it is a very, very different story. I think, so different, I think, that it is worth revisiting Chad Steingraber's $20,000 XRP projection. And it just came up the other day. I thought I would, take this for what it is. Xena XRP did originally post a few days ago, Chad, are you still going with your how can XRP reach $20,000 theory? And Chad Steingraber did repost that. It's right here. It consists of three components, ultimately. Assets built on the XRP ledger, so stablecoins are the utility. XRP becomes a reserve asset to power the utility. XRP is removed from public supply by institutions, and that's how it's going to roll. So I would like to revisit the video I did on this just over a year ago, March 31st, 2024. Listen to this. Which now brings me to the Chad Steingraber theory, brought to you by none other than Chad Steingraber, the road to a $20,000 XRP. So guys, here is the thread, and this was the updated thread. And of course, I will link this in the description of the video for you if you want to look it over. It's been a year and a half since I wrote this original thread, and a lot has happened, including some parts of this theory. So grab a drink and a snack, and we shall take a ride. So the original theory was posted in August of 2022, as I mentioned, and he had posted this one late last year, December 2023. So let's get into this. The original 2022 theory is still alive and can be referenced. See the op. The following is going to expand on it slightly with further details and references to part of this theory that have currently materialized. So the road to is a journey that leads to a final destination. If you only wait until the end, then you will have missed out on a life along the way. Enjoy every step up the mountain, and the victory at the summit will be that much more sweet. So number one here, guys, we got asset scarcity. So part of supply and demand is also an issue like an auction bid where many people are bidding on a limited asset of assets that only some of them may own. This can drive up value. It only stops when no one else is willing to pay a high enough price. So that is the first thing, okay? The more assets that are tokenized on the XRP ledger, obviously, the more demand there will be. That is just kind of basic supply and demand fundamentals. So that goes towards asset scarcity. To account for future market appreciation, current price can be projected into value not realized yet. If I buy a valuable plot of land and sell the idea for a future desirable house, I can sell it at the perceived value today based on what we think it might be later. So that is spec appreciation. Without forced appreciation, only $250,000 of new money entered the hood, bringing the original money injection to about $1 million. So the other $500,000 in the hood market cap is phantom money. So this is not real money. This is theoretical money. This is due to the willingness to pay a price for an asset of perceived value. So if you assume something is going to be a high price and you're willing to pay for it, that is the perceived value. That is not actual, real, tangible value. Third, he says, limited assets. The Mona Lisa is valuable because it's the only one ever made. We can make copies or what we call derivatives of that product, but we can't make more Mona Lisas. We can't make more originals, right? Also, because of its importance to society, we place on it a very, very high value. The value is in our minds, though. And so this idea of derivatives, guys, you got to think of the derivatives market and how big that is. If we're going to be tokenizing things that don't even exist, well, theoretically, the sky is the limit. This is exactly what's going on with Bitcoin ETFs. The big players, the BlackRocks, the Fidelities, they're buying up actual Bitcoin and they are selling you, the plebes, a derivative product. You are not actually buying Bitcoin from them. You are buying a derivative. And so theoretically, I mean, they could keep, if they were immoral, they could keep selling you Bitcoin even if they don't have the Bitcoin to back it up. They could sell you that derivative product and you would keep buying and therefore more money would enter the market. And so the same stays true for the XRP ledger. derivatives products, the sky is really the limit in terms of how much phantom money can go into that. Now, for those new to XRP, let's establish some facts. A limited supply or less. So there's 10 billion XRP, no more than that. On each ledger transaction, we destroy or burn a small portion of XRP to validate its transfer. As you guys probably already know, that can issue any other asset on the ledger. XRP is dirt cheap today because almost all are trading in public small pools of existing money that essentially wash trade back and forth through retail. The public supply is important because that determines the price. Circulating supply, though, is what is king. Today, XRP market cap is about $30 billion, but wait, that doesn't mean there is actually $30 billion of money that has been put into XRP, see number 3. There's far less, as the market cap is just a reflection of the current value anyone is willing to pay. So remember, phantom money. This goes back to the concept of phantom money. Number 8, we were told the story that banks will send money to public exchanges, but what they are really sending it to are fully registered custodians that hold XRP and provide the currency swap. This is Ripple software, now called Ripple Payments. It used to be called ODL. So Ripple Payments are really there for the little guy, leveling the playing field for small banks and money transmitters to eventually eliminate dependency on correspondent banking to major banks, allowing competition to flourish. Ripple Payments are for the minor leagues. So, for example, companies like NEOM. This is exactly what we thought of ODL. Working during this time did not materialize, and that is because of Bank of America, Chase, Wells Fargo, etc. will not send their money transfers directly to open public exchanges. So this is why historically we have not seen ODL really get up off the ground. It was mainly for the small guys. The big banks really kind of have to be pushed into it, and I don't think even at this point they have been. So to clarify the retail trading statement, this doesn't mean eliminating retail trading. It means that the actual purpose and the reason for its existence is for instant access to global liquidity and swapping of assets without an intermediary entity being the gatekeeper. So banks require privacy. That's not going to change anytime soon. Let me be clear. No bank on earth will expose their internal ledger transactions to the public. And guys, this is why, another reason why, kind of a sidebar here, why Ripple is creating private ledgers for these banks, for central bank digital currency projects around the world. The privacy is for you, for the bank to conduct business and create loans without prying eyes. So next one, 13 down here. We know now that Ripple has been working with banks like Bank of America or SABB to create private XRP ledgers. This allows any bank to create a financial infrastructure privately without exposing customer or banking data. The key here to remember, guys, is custody. So XRP will become a reserve currency like gold. Remember, from Ripple, banks holding XRP, that's the holy grail. Remember, XRP can issue any other type of IOUs. CBDCs can be issued. That means Bank of America will create a BOA coin on their private XRP ledger. And then down here, let's continue down here. Number 15, BOA will create a private ledger and hold XRP as a reserve asset, like how central banks will hold gold as a backing asset. And so Bank of America creates BOA coin, an XRP derivative, internally for tracking balances in user accounts. So see how they're going to be using XRP theoretically for this derivative purpose. Internally, Bank of America can do whatever they want as long as they hold a balance of XRP. They are not going to send their XRP anywhere, just like their gold reserve. In fact, they will seek to increase their balance to grow their business. How do they send their money to another bank? Well, this is why we have liquidity hubs, now known publicly as Metaco. Remember, Ripple did decide to go with the liquidity hubs, but then I guess at a point they just decided, okay, it's probably just going to be a lot easier if we just buy out a custody company, in this case, Metaco. So this is an institutional grade custodian that holds a massive basket of different digital assets. Metaco connects directly to the banks, so HSBC, for example, to act as their custodian. The liquidity hubs also hold a balance of XRP because they are the third-party exchanges that require a transfer on the XRP ledger of the issued IOU derivative into another IOU derivative. Why? Because HSBC will never hold a BOA coin. In turn, BOA will never hold an HSBC coin. So you got to think of this, right? These companies are going to have their own products, their own coins, their own derivatives, and nobody's going to want to hold this proprietary coin from another bank. It's their competition. So they're all going to have to agree on a third-party digital asset. In this case, guys, XRP. So BOA coin is sent to Metaco's liquidity hubs using XRP to transfer that into HSBC coin, so on and so forth. That dollar amount of the HSBC coin is then sent back to HSBC, and it shows up as dollars in your account. So have you spotted the magic trick yet? They need XRP. It's now a business dependency. And just like gold, they're going into beast mode and are hoarding what is now the most valuable asset on earth. The entire global transfer system of money depends on it. So, I mean, we can extrapolate here and we can assume that XRP is going to be the only digital asset to transfer money. I have a feeling there'll probably be like 2 or 3 different ones, XRP being one of the main ones. But guys, that is still a huge portion of global liquidity. Think of it as a digital arms race where every bank, every liquidity hub will hoard XRP to increase their balance sheets. The majority of XRP escrowed at Ripple will never see the light of day. They will be the lender of last resort. When they run out of OTC options, what will be next? Well, guys, that would be the public supply, you and I, holding our XRP. The circulating supply of XRP on crypto exchanges is far less than people even realize. A lot of the XRP has been lost. Remember the Mellon banker who died and his keys were lost forever? I think he held something like 500 million XRP. If you guys didn't catch the video I did on that a few years ago, I'll try to find it. I'll link it up here in the top right-hand corner. The banks, when ready, are going to be coming for the public XRP supply, and once they have it, it is then gone. It is gone as in forever. So the price has to be high enough for us to want to sell that XRP. For some people, they're going to sell it at lower prices. For others, we're going to wait for it to hit these huge values. So now imagine banks and liquidity hubs overnight begin panic mode and panic buying XRP, market supply, an institutional FOMO run on an order book with multi-billions of dollars, hitting like a tsunami like we've never seen before. So what happens next, guys? It goes from 30 cents to 40 cents, 50 cents, $1. And then what happens? Other exchanges start arbitrage to the highest price. Private wallets transfer in and out. At that point, they're not coming back to dump on the public market for profits. That's peanuts compared to the business of global money transfers in the multi-trillions of dollars. So guess what? I've just been talking about the banks and never addressed the investment side of this thing. So this thing is just enormous how Chad Steingraber sees it. The investment side, the global US dollar money supply and circulation in somewhere around $40+ trillion. To be the 1% of public XRP holders varies somewhere around 60,000 to 70,000 XRP, valued at about $30,000-ish. There's only a few billion, though, on exchanges for public retail trading. Now, add the rest of the world's banks, the rest of the liquidity hubs, add the world's billionaires. They'll want their cut, add the quadrillion plus derivatives market, add common use in public projects like video games and other applications, guys. You got to think about this. This market is huge. So to get to a $20,000 XRP does not sound far-fetched, at least, when you think of the sheer quantity that Chad here is explaining. So that's going over Chad's theory in detail. Again, assets building on the XRP ledger. Stablecoins will be the utility. So this is him in 2025 now reiterating what he was talking about. And I will also list this theory in the description of the video. XRP becomes a reserve asset to power the utilities, and XRP is removed from public supply. If you guys heard from that video, I did talk a little bit about Medico and how Ripple acquired Medico at that time. That was a brand new acquisition. Don't forget, guys, since I posted that video, Ripple has had several new acquisitions, not to mention other developments like, the SEC lawsuit is finally said and done. There is the Hidden Road acquisition, so that's the prime brokerage. Guys, that's going to get XRP price up. There's going to be way more demand now for XRP. Think about all the new licenses too, right? Now that the stablecoin bill has passed and now that legislation is on the table, I think crypto companies like Ripple are, Ripple's been doing it for a long time, but many crypto companies are now looking for these payment licenses so that they can legally send payments to and from other countries around the world. Not to mention all the ETF demand, guys. Think about the ETFs. That demand is going to go up as well. So this is just the beginning. I also want to just point out the fact that, this is also happening. Texas Governor Abbott did sign legislation making gold and silver legal tender. And it's not just Texas, guys. Take a look at this. States bid to reestablish link between money and precious metals. The gold standard has long been viewed as a symbol of economic stability, a system that has allowed citizens to hold their wealth with confidence, secure in the knowledge that their money would hold value over time. Texas is now the most recent one, but I do believe 12 other states, I think it did say somewhere in here that 12 other states have been looking at this. So how do you think people are going to be able to, in the United States, are going to be able to pay using gold and silver? It's going to have to be tokenized. And tokenized using distributed ledger technology, guys, maybe over the XRP ledger. So, you know, a $20,000 XRP looking very viable. If we are trading in a spec market, we are going to get up to a certain price. I can almost guarantee that that price won't be as high as if we do see the real world utility. So for more insight on what I think, where I'm going to trade, follow me at patreon.com/workingmoneychannel. If you guys are interested in supporting Working Money Channel, you can head on over to the merch store. I've got merch available for you guys. Link is in the description of the video. And, you know, if that's not your thing, just please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.